Hey guys, so I want to talk about whether or not you can buy property in this tumultuous market that we're in this craziness that we're experiencing right now. And so what I want to do is lead up to the answer to that question. And that is, I'm going to give you an example deal that we're doing right now. In fact, we're raising money for, I think we've even got a couple slots left. But I want to go through a particular deal that we have that we're doing right now to give you an idea of the sorts of things that we look at that frankly make us virtually recession proof, okay? And these are the things that you need to be looking at if you're evaluating deals right now. So I'm going to go through a deal that we're doing right now in Cincinnati, and it's called the Views of Mount Airy, and I want to go through it with you to give you an idea of the sorts of things you should be looking at. Now, are there going to be incredible opportunities coming? You better freaking believe it. There are. It doesn't matter how quickly this thing turns around. There are going to be there are owners that are on the edge, and this has pushed them over the edge. In fact, there's a very large one I'm aware of right now that's really flailing. But what I want to do is, hey Paul, what's up, Kelly? What I want to do is just give you some ideas and strategies for continuing your search for deals and maximizing it. So let's get into it. So I'm going to use this Cincinnati example so you can see the sorts of things that we're looking at right now to evaluate deals. We're not getting caught up in the hype. We're looking at the fundamentals, and that's the bottom line, is going back to the fundamentals. So this particular deal, so I'm going to talk about stress testing. I'm going to talk about stress testing a deal. I'm also going to talk about the other sorts of things that we look at when we get into a particular market and into a particular asset, so that we don't have to worry about things. Because guys, I don't know if you've ever heard my story. In 2008, I had 800 houses and I had multiple apartment complexes, and it was my houses that pulled me down. And because multifamily is recession resistant in a big way, and in fact, my portfolio, I think the rents on my multifamily only pulled back about 11% versus, and the national average never got over 15%. And so to give you an idea why that's a big deal is, like, for example, this particular asset that we're doing right now in Cincinnati, it can be 33% economically vacant and we still break even, okay? Another thing that we've done on this asset particularly is we've raised $1 million in operating reserves. That's more than our mortgage for a year, okay? Just in case. So can you buy right now? You better believe it. But let's talk about the fundamentals. And if you guys have any, hey Tyler, what's up, brother? If you guys have any questions, Monique, Eric, good to see you guys. If you guys have any questions, just ask them. But so this particular deal, it's a 5 to 10 year investment term. Our projected cash on cash is 10 to 13%, and our IRR is going to be 16 to 18%. Really solid numbers. But again, day one, we can break even at 33% vacant, and that's being conservative. It could even be a little more than that. Okay, so this particular asset is in Cincinnati. So let's talk about why I like this market and what you should be looking for in a market, okay? Well, this particular market is one of the 31 largest U.S. cities, has the lowest cost index in the country, and it's got over 1 million people, 1.3 million people work in technology and manufacturing, okay? It's home to 8 Fortune 500 companies. So guys, when you're evaluating a market, these are the sorts of things you need to be looking for in that market. You need to be able, if you're interested in a particular market or sub-market, you better be able to rattle off the top 8 to 10 things about that particular market, like I'm doing here with this Cincinnati deal. So it's a very highly educated population, which we like to see. Lots of cultural attractions, of course. But the thing that we look for, there's 3 things we look for in a market that have to be growing: population, income, and jobs. And what's the most important one of those? Jobs. So let's talk about jobs for a second. In Cincinnati, it has a diversified growth engine in health, education, tech, retail, and manufacturing. And we look for employer diversity. We want to see diversity in the employment in the different types of employment, and ideally recession-resistant employment. See, what crushed me in 2008 was I had a lot of C-class houses, and most of my tenants were in the trades: plumbing, electrical, HVAC, drywall, roofing, and it fell off a freaking cliff. this particular asset, the other thing we love about this is there's an Amazon airport. Amazon's building an airport in Cincinnati near this property, and it's going to be it's $1.5 billion project. So that's another thing. But we look for the largest employers in particular areas. So there's a med center with 33,000 employees, the financial services 2,000 employees, the University of Cincinnati 15,000 employees, Kroger's headquarters over 45,000 employees, Procter & Gamble is based there, 95,000 employees. This is the kind of stuff we want to see, and I could go on and on. So that's what you want to chronicle and be looking for, is that diverse, recession-resistant employment base. Like I just described, okay? So that's another thing. Like I said, that Air Hub, that $1.5 billion Amazon Air Hub is going near Cincinnati. I don't know if you guys have ever been through Memphis, but like FedEx has a hub there, and it's a huge driver in that economy because Memphis is considered a transportation hub. Well, that's what they're doing with Cincinnati, and that's what Amazon's doing, scheduled to open next year. And they expect over 50 planes to go in and out of there, and it's going to employ over 2,000 people. Now, next we look at the area demographics. And by the way, guys, if you're accredited, we've still got a couple slots left in this deal. Just text partner to 41411, but it's almost fully subscribed. But anyway, we look at the median monthly rent, and here's why this is a big deal. Median monthly rent there is $697, but the median house value is $143,000. Do you see that disparity between $697 and $143,000? We do not want them to be able to go buy a house for what they could pay for rent, and they can't here. Okay, decent median household income of almost $40,000, and then the other thing that we look at very heavily is we look at historical unemployment. And we look at how it relates to the national average. It's a very important metric. And this particular the unemployment, and we went back all the way to 1990, and the unemployment was very consistent with the national average and even beat it in most places. So that's another thing. Right now, unemployment was, well, who knows what it is today. It's pretty high, but it's not going to last. But at the time we did this presentation, it was 3.4%. Okay, and again, you want that employment diversity. You want average growth income, and here it was 32%, huge. And so these are the kinds of things that we look at when we're evaluating a deal to give you an idea. Now I'll talk about the particular asset, why we like the asset. First of all, it's got incredible views. Sits on how many acres? Oh, it's a big property. We're going to put almost $2 million in capex into it and improve it. The rents are significantly low, and I'll give you the exact numbers here in a minute. But this thing sits. It was actually a C-, even a D area, and it is turning around. It's near downtown. It's an incredible gentrification opportunity. And I will tell you, if you've ever heard me talk about gentrification, if you can get in that path of progress, it's huge. Now, it is 282 doors, built in 73. It's got amenities like a playground and barbecue stations and trails and clubhouse, but really nice views. And so again, this is the sorts of things we look for. Then we look at what sort of major retailers are nearby. And so, we've got Starbucks, Lowe's, Kroger, Target. Those are the kinds of things we want to see. We don't want to see small retail. We don't want to see localized retail. We want to see national retailers. And again, if you're accredited, reach out to us. We've still got a couple slots left in this thing. And this is just text partner to 41411. And so let me show you. Let me talk about the rent bumps on a place like this. And again, this is the sort of stuff you need to be looking at. Hang on one second. So, it had been owner managed. Anytime you can find a property that's been owner managed, you bring in professional management, it makes a huge difference. Hey, Michael, what's up, brother? If you guys have any questions, just feel free to ask. Below market rents. Right now, the rents are about $100 below market, as is. It's now a C class. We're going to turn it into a B class asset. So again, these are the sorts of things we look for, guys. And the big thing is employment, jobs, and the stress testing. Okay, huge stress testing right now. And so, and again, this thing will sustain itself at 33% vacant. We're going to have $1 million in operating reserves. pretty hard to go sideways when you're stress testing like that. And again, we had in my portfolio in 2008, we had about 11% decline. Now they just posted Fannie and Freddie are going to offer operators a forbearance as long as they don't evict anybody through June. So you don't, if you hold an asset right now, you're a syndicator and you're an operator, a KP in a deal. If you can do a forbearance with Fannie and Freddie as long as you don't evict anybody, and they'll cover your losses through June. So, there you go. That doesn't happen in the stock market, guys. Okay, I've got friends that have lost 30-40% of their portfolio right now in the freaking stock market. Now, will they get it back? I don't know, but that doesn't happen in multifamily. People have to have a place to live, which is why the government's stepping up to make sure that people don't get evicted. That doesn't happen in the stock market, okay? And that's why, this stuff is such a conservative investment, safe investment, and which is why I love it. Again, So yeah, that forbearance is fantastic. That literally just came out yesterday. And if you're in my multifamily group, one of my warriors, Greg Chu, just posted the article. I had already posted it in our boardroom, and I forgot to post it in the group, but it's there, so you can check it out, which is fantastic. So that takes all the pressure off operators. And we were okay anyway because we're so conservative. We can sustain big economic vacancy, but most operators can't. So this is going to save a lot of operators, the fact that they're doing that. And by the way, I've also got, I was planning to be sold out with my Orlando boot camp, and that obviously that didn't happen. We were going to have 700 people there, so I've taken that online. It's going to be a live stream, and if you're interested, it's like $97, super early bird pricing for 2 full days of me training you. If you have any interest in this business at all, you're crazy not to do that because it'll be incredible. And we'll be talking about opportunity. We'll be talking about, how you manage in the coronavirus and deal with all of this right now that we're dealing with. But again, when you invest as conservatively as we do, it's truly a non-event. So anyway, if you're interested in that, just text ROD LIVE as one word to 41411. Again, if you're accredited and you're interested in one or more of the assets that we're taking down right now that, like I say, are very conservative but still have solid returns, text partner to 41411. And if you guys have any questions, please feel free to ask them. But again, you analyze the area, you analyze the asset, you analyze the submarket, you analyze the jobs, and those are the things you look at. And if you're just joining me now, go back and listen to the rest of this as to how you can still be investing right now. You should, and again, there are going to be opportunities coming. Brokers have been the belle of the ball up to this point, and that's going to shift. They're not going to be as, they're not going to be as unresponsive and put offish as they have been in the past because, the climate is shifting. But anyway, if you got any questions or comments, please post them. Just wanted to give you a little update here, and I'll be going live as often as I can, guys. So make it an awesome week. We'll talk to you soon. See ya.